Hi, hopefully everybody can hear me okay. We're just going to run through the slides. As Olivia said, there are slides for the presentation, but I'll probably cover off most of it as I go through anyway. So even if you can't see the slides, don't worry, the information will still come across. But first of all, thanks to Hereford and Worcestershire Chamber of Commerce for inviting me to do this presentation. Hopefully you'll find it informative to give you a bit more information about the CBILS Coronavirus Business Interruption Loan Scheme. I'll call it CBILS from now on, as we'll waste half the time just naming the scheme. So yes, I'll cover a bit of the key criteria, some of the changes that came about last week in terms of the scheme itself that were announced by the Chancellor, and also how to apply. You'll then hear from one of our accredited lenders, Angie at BCRS, who'll talk to you a little bit more about the key criteria when applying and the actual process to go through an application for their purposes. So first of all, just to give you a bit of context about the scheme itself, in case you haven't kind of heard about the general premise of it, is to support UK SMEs to access finance that they will urgently need as a result of the current pandemic. So we understand lots of businesses will be facing big holes in their cash flow and will need those plug-in. So what we're trying to do through this loan scheme, through provision of a guarantee to 40 accredited lenders, is to support SMEs and support the lenders to basically approve more credit decisions for those urgent loans and overdrafts that might be required by SMEs. So I think it's important, first of all, just to touch on, rather than just going straight into what's changed with CBILS, just to kind of re-emphasise what the terms were for the scheme when it was initially launched on the 23rd of March. So this scheme, as I've said, is for UK SMEs. There is a turnover threshold, which is 45 million. And that is at a group level, so that's not individual entity. If you're part of a group, group turnover is actually taken there in terms of that metric. The lender will need to assess the proposal. It needs to be for business purposes and it needs to be considered viable. You will also need to evidence that you have been impacted as a business by the recent COVID-19 outbreak. So that's the kind of general terms around CBILS. A little bit more in terms of some specifics and some numbers behind the scheme. So in terms of the amount you can look to get from an accredited lender, this is up to 5 million. And this can be across loans, overdrafts, asset finance and invoice finance. Key to note that not all lenders have all variants of the scheme. So you'll need to approach your lender and understand exactly which variant they have, whether it be overdraft or loan or such like. There's different maximum terms depending on what variant you're looking to take. So for loans and asset finance, you can have facilities up to 6 years. For invoice finance and overdrafts, it's up to 3 years. It's key to note that in terms of any security for a CBILS facility, your residential property, your main residential property, can never be taken as security, so that's never at risk. So that's key, just to understand that a bank and other lender will never seek to take a charge over your personal property. There's no guarantee fee for the borrower to pay. The government will also cover the first 12 months worth of interest and lender levied fees. So this should reduce the interest, reduce the costs in terms of repayments initially, which should be useful to many SMEs in the short term. One key thing about the security side, again, is that personal guarantees may be considered over 250,000, but not under 250,000. And I will touch on that in a little bit more detail because that was one of the key changes of the scheme. So if we just move on and cover the new changes of the scheme, you've probably heard a lot in the press. There's been a lot of coverage about certain aspects of the scheme that when it was launched on the 23rd of March, they got a lot of coverage because they were either cutting out kind of big chunks of SMEs that were wanting to apply, or they were making it not appealing for SMEs and business owners to even want to apply for the facility. And that's not what we wanted. That was not the purpose of the scheme. We wanted it available to as many SMEs as possible. So there's a few kind of changes that hopefully made that easier for SMEs to apply and made it more favourable in terms of the terms. So first of all, as I've just mentioned, the personal guarantees. Under 250,000, none of the accredited lenders and no newly accredited lenders that might come on board under the scheme will take guarantees, personal guarantees, under 250,000. That wasn't initially the case, but it is now. Nobody can do that. Over 250,000, it's slightly different. Any lender, it's at their discretion whether they take personal guarantees, but what we have done is put a cap. So they can only take a maximum of 20% of the facility as a guarantee. Okay, so it won't be anywhere near kind of the 100% that has been kind of bandied about. It's maximum of 20% over the 250,000. And also in terms of that security, just to stick on that point, the fact that you might have plenty of security to support a facility doesn't render you ineligible to receive a CBILS loan. And one of the big issues that we had, again, when it was first launched, is that as you were approaching lenders, and you may have approached a lender yourself already, that if you were a good enough business that they would provide a commercial facility, then they would seek to do that first before offering a CBILS facility. Again, that has now been changed, and that is now not the case. So even if you were meeting the criteria for a traditional commercial facility from a bank or alternative lender, you will be offered a CBILS facility with the CBILS criteria attached. You don't have to go through the normal route anymore. So again, just to reiterate, personal property would not be taken as security for any of these CBILS facilities, whether it's under 250,000 or over 250,000. So they're the key kind of changes. What I thought it might also be useful to cover off is other things that have been kind of covered quite widely in the press, and just to give you our take on some of those issues. So interest rates after the 12-month interest-free period has been something that's been talked about, and there's been various kind of amounts that people have suggested lenders are charging. Now, the Chancellor, when he made the announcements about the changes, stopped short of putting any kind of cap on interest rates. But what we do ask from all the lenders and any new accredited lenders is that they pass on the benefit of having an 80% government guarantee in their pricing model. So we don't dictate what that pricing should look like. We have a range of lenders that have varying pricing models as business as usual. But what we do say is that if you're using our CBILS guarantee, you should be able to pass on the economic benefit of having that guarantee in your pricing structure. Something else that was announced was the kind of larger CBILS facility, CBILS Plus, if you like, which was to address that kind of missing middle that has been spoken about. So businesses that are turning over more than 45 million, less than 500 million, a huge gap there. I think there's about 10,000 businesses in the UK that kind of fit into that space. So that is something that we're currently working through in terms of the terms of that facility. So unfortunately, there's not any kind of real detail in terms of that criteria. It's looking like it will be an 80% guarantee as the current CBILS facility is. And at the moment, it's looking like it will be on commercial terms as opposed to the interest kind of free period that we've got with this current CBILS facility. That's still being worked through, and I think more terms and more detail about that scheme will be released towards the end of the month. Finally, I've mentioned a few times kind of newly accredited lenders. We've had a really strong demand from lots of funders that aren't part of the scheme, and from existing accredited lenders that might want to take on another variant of the scheme. They might have a loan, they might want to do some asset finance or invoice finance under the scheme as well. So we've mobilised a much larger team within British Business Bank to deal with all those inquiries. What we've also tried to do is expedite the process where we can to make it a lot faster to get some of these lenders accredited and get them out there lending some more of this money to small businesses. What we're hoping is that the process, which in the previous iteration of the guarantee scheme might take 2 to 3 months, we can bring that down to a matter of weeks. And we're hoping that we can get some of those early kind of applicants through the process in the coming couple of weeks. So we're working very hard to get more accredited lenders on that scheme. If you're the lender, we've approached a lender that is not on that scheme, it might be that they have applied and we're working through those applications at the moment. So in terms of the application process, you should absolutely be approaching one of those 40 accredited lenders. Those are detailed on the British Business Bank's website. There's a huge amount of information on that website, so I would implore you to have a look there. If you've got any kind of particular questions, I think there's about 25 kind of frequently asked questions that we've put on there as well for SMEs. And I think my colleague Lauren has put in the chat a link to an SME fact sheet as well. So if you have a look at the fact sheet, have a look at the frequently asked questions, hopefully that will answer a lot of the queries that you've currently got. So that's a bit of kind of positioning from my perspective. I'm happy to take questions at the end of the presentation, but what we'll do now is we'll hand over to one of the accredited lenders, which is BCRS, and Angie Preece from BCRS is joining us, and she'll be able to talk through kind of the process things from her side as one of the accredited lenders. And I'm happy to answer questions at the end of Angie's presentation. So thank you. Angie.
Hi there, can you hear me?
Yeah.
Good morning, everybody. Welcome from North Worcester. Hope you're all well today. Pleased to see you've all managed to get dressed, at least from the waist upwards, which is quite pleasing, certainly from where I'm sitting anyway, so well done for that. Thank you, Ryan, for giving us the sort of larger overview of CBILS and what that looks like. What I'm going to try and do for you is just spend a few moments explaining what it looks like from our point of view as one of the 40 accredited lenders, sort of down on the ground, dealing with people like yourselves, having conversations with you guys every day. And really, I just wanted to start by saying we appreciate it's really, really, really tough out there for you guys that are needing support, but it's also really, really tough for us lenders as well. I know there's lots in the press about the sort of whether people are or aren't providing support for people. We're doing everything in our power. We're working 10, 12, 14 hours a day, every day, including weekends, to try and make sure that we get these loans out and support viable businesses. So just to let you know, we're doing our bit. So again, like I say, I'm going to try and give you information from a lender's perspective and address some common queries, understanding it's a really stressful time for everybody. The first thing to say is that you should be going to your bank, no question. You should go to your bank in the first instance to talk to them about a CBILS loan. They will be the people that will be giving you the best interest rates, and hopefully they know you, okay? If for whatever reason they can't support you, then you might be going to look at one of the other accredited lenders. And if you don't know about BCRS and who we are, have a look at our website, and that will help you understand that we're sort of out here, sort of in this market already, helping people that are maybe a little bit stressed. We see our current solution is to support businesses over the short to medium term with loans up to £100,000 for new customers. We're currently seeing this as requirements for about 3 up to maybe 6 months, and therefore we're asking for 6-month cash flows so that we can understand what that business is going to look like, which I'll come on to in just a second. And this should demonstrate working capital requirements over this term. Points to consider when you are looking to submit an application to us here at BCRS. First of all, we can only take businesses from the West Midlands, so which should be fine for all of you guys. But I think the really, really, really big thing to be aware of is the crux of whether you will qualify for a CBILS loan. And with us, I imagine similar with most lenders, but you will have to check, What that actually means is that the business must be able to demonstrate that it was viable before the pandemic. Now, that might seem a bit harsh, but at the end of the day, if you're going to lend somebody money and they weren't viable, and then there was a pandemic, the chances are, unfortunately, you probably still wouldn't lend them money. So we do need to know that that business was viable, i.e. profitable, and had a sound balance sheet before the pandemic. So, I'll come on to that information in a moment. A few other things to be aware of is we would need to see a positive balance sheet, and we would need to understand that that individuals within those businesses had clean credit history, i.e. no county court judgments, no IVAs and no bankruptcies. We would also want to see that up until December, that there was no unpaid items in the 3 months prior to December. We fully understand that that might not be the same on the bank account now, because obviously things are tough, but we would need to see that it was up until December. And similarly, having an arrangement with HMRC, i.e. time to pay. Again, we would expect that businesses would not have been in the time to pay up to December. Afterwards, we fully understand that you may well be now, and obviously that's a really good way of supporting your cash flow through these tough times. So that's sort of a bit of an overview of what you need to think about to find out if you're going to be eligible with BCRS. Once you've done that, we and other lenders are probably going to need very similar information, and that's going to look like an application form, statements of assets and liabilities, i.e. what's your income and expenditure, and personal credit reports as well. Annual accounts for ideally the last 3 years if possible, and management accounts including a balance sheet up until December 2019. And again, that needs to show us that it's a positive balance sheet and that you were viable up until that time. Debtors and creditors list, and the cash flow forecast to show us what the business looks like over the next 6 months. This is probably the most important thing. And actually, there's no easier time for you to do a cash flow forecast now. We know what's going to happen. Most businesses are closed. So for 3 months, the likelihood is you've got no income, but you've got some expenditure going out. You've got your rent. You've probably got your staff to pay until the furlough payments start coming in as well. So there should be no easier time to produce a cash flow for a lender at the moment. We need to understand your existing debt and what your bank account looks like, so we need access to that as well. We're also asking you to provide us a little bit of general information about the business, and probably a little bit more than we would normally, and that's really to help that when it comes to doing a credit application, which I'll talk about in just a sec, that really speeds up the process for us. Can you imagine, or you've heard in the press about how many applications that are coming into lenders? It is crazy. It's absolutely crazy. So make sure that you absolutely have all of your information. Whoever you're going to, make sure that you have that as much information and more as possible to give the lender, and that will ensure that you stay at the top of the queue and that you get your response as quickly as possible. And that's our stance on it. If people are going to deliver half information, unfortunately, we're just not going to be able to look at it. We're going to need everything all at once. Once we've got everything, we at BCRS will put that application together, get it to our credit team, get that application sanctioned. Obviously, sign up is a little bit more challenging than it used to be. We used to come out and sit with the customer and sign up those documents, and now we're having to do that sort of either by post or electronically. So we're working with each customer to understand how we can do that best and how we can do that as quickly as possible. Just to finish, as Ryan alluded, there are no personal guarantees being taken, and this has been an issue that's been going for quite a while in the press. We do not take any personal guarantees, not even for the 20% that we could. We're deciding to go down the route of not taking any personal guarantees at all. We will require a debenture over the limited company as normal, and we will require you to self-certify you do fit for a CBILS loan. And again, as Ryan mentioned, all lender fees will be, you will not have to pay for those, and also the first 12 months will be, the interest will be paid for you, so that it's capital only. I think and hope that I've covered most things there. I don't know if they've been in the right order, but I hope that's covered most things for you. Sorry, I haven't gone through the slides there. I hope that's covered things for you, so I'll pass back to Olivia.
Oh, me. Hi. Well, thanks both. Thanks, Ryan. I hope that was helpful for everybody to hear from Angie and to hear from Ryan on the kind of two different elements. I think, Angie, Ryan, there's been a couple of questions in the group chat, if you both want to have a look at those now and address any of those. And just open out to the floor, really. If anybody else has got any questions that they want to address to either Angie or to Ryan, if you just put who you want to address it to, or if you don't know, that's fine. If you want to put those in the group chat now, so that we can try and help you through those. Ryan, Angie, if you want to have a look at some of the ones that have been put in a little bit earlier and see if you can give any more information about those.
Ryan, do you want to pick up about that overseas one?
Yeah, I mean, just to reiterate, so it's whether or not the group is 45 million turnover or not. That includes all subsidiaries of that group. So obviously, in terms of whether you are a legal group entity, then obviously that's for you to demonstrate to the lender in terms of whether you're de facto group or separate legal entity. So it does need to be below 45 million, but if you are within the group structure, whether it be subsidiaries or overseas owners, if it's within a group structure, then it needs to be within that 45 million. We've not got detail yet in terms of the CBILS plus, the larger CBILS, in terms of whether that 45 to 500 million will be applying the same criteria. So we'll wait and see on the larger CBILS facility.
Okay. There seems to be a bit here about whether banks are actually doing what they're being told to do as well, and how much has actually been lent. So the elephant in the room, I guess we need to address that. I can't speak for lenders. All I can do is speak from BCRS point of view. And I do speak to banks, obviously. I speak to a lot of banks, and it's tough. You know, lender, hopefully Ryan can speak from the bigger point of view, but for me on the ground, like the guys out there trying to write these applications, we're working our butts off. We really are, you know, we're trying to assess the information as quickly as possible and get these loans out as quickly as possible. There was a lag, and there was always going to be a lag from the announcement through to getting those loans out, because from a lender's point of view, getting the paperwork ready, the logistics, all the stuff that was in the pipeline that then didn't fit what it was fitting before, which is EFG, all that had disappeared, and there was a huge cavern that we had to sort of go back and fill, and we feel that we've done every job 3 or 4 times at the moment, and we've been feeling that over the last couple of weeks. So that's really absorbed our time, but we feel that we're getting to the end of that now. We are releasing loans, and we have been for a few days now, so we're doing our best that we can. Maybe whether, Ryan, you can pick up on the bigger picture of that and whether banks are doing what they should be doing.
Yeah, I mean, we've not got our own stats yet in terms of deals done. I know UK Finance have released some today, but that's not our information. That's information they've got from the larger banks through their loans, asset finance and invoice finance variants. And there's a bit of a lag in terms of those deals that then get put onto our system. So we haven't released our own data yet. I'm sure we will do as and when we've got an accurate figure. But I mean, what we're asking the banks to do is exactly in line with the scheme. I think, as Angie's alluded to, the volume of inquiries is what we'll need to kind of flatten out over the course of time. I mean, the banks are trying to pass on the interest rate. I noticed somebody made a comment there about interest rates north of 8%. I can only kind of tell you what I'm being told myself. So I was on a webinar yesterday with NatWest, and they'd within the last 24 hours done 3 CBILS deals, which were between 4 and 8%. He said he wouldn't expect any banks to be doing kind of interest rates in double figures. So I think that's probably a fair comment, and that's obviously what they're seeing on the ground. I think it's all risk assessed. So obviously those interest rates will be risk assessed based on the individual requirements of the business. I think what's important from our perspective now is to make sure that we've got as many lenders that want to be running CBILS and across all the variants, so overdrafts, loans, asset finance and invoice finance, accredited to the scheme as quick as possible, because there's been lots of contacts from businesses, particularly in kind of the Marches and Worcestershire area, that have lenders that aren't coming on the scheme. So what we want to do is make sure that as many businesses as possible, when we say go to your bank or go to your first lender, that those are actually accredited and they can kind of support that business through CBILS. So yeah, no exact kind of data at the moment, but I'm sure we will be releasing that in due course. Yeah.
Okay. There's a comment here about how many applications have we had at BCRS and how many have we approved. We get introductions via our CRM system and direct to our BDMs out on the road, and we've got 5-6 BDMs out on the road. Our CRM system went ballistic, absolutely ballistic. So instead of having, I don't know, something like maybe 10 applications in a week or 10 inquiries in a week on our CRM system, at the beginning we were having 500 a day. Can you imagine trying to manage that? That was just ridiculous. Sadly, a lot of them were out of area, so they were sort of quickly put to bed as well. Regarding how many applications we've had, I can say I've had what feels like hundreds and hundreds of conversations with people. What I would call an application is when eventually I'm getting everything back in on my desk. So I've had dozens and dozens of conversations in information that's actually on my desk. I've probably got a list of about 9 or 10 full applications ready to do at the moment that I'm working my way through, and every one of them's being approved. Every one of them. I wouldn't be writing the application if I didn't think it would be approved, because nobody needs to be wasting time at the moment. So that's just sort of a little bit of a flavour of what we're dealing with here.
That's great.
Sorry, there's a question from Julie that I just wanted to pick up on in terms of not having a relationship with the bank. So obviously bank teams, face-to-face teams have been depleted over the last few years. So a lot of smaller businesses will be managed by kind of call centres, either UK based or overseas. We understand that a lot of UK call centres were based over in India, which was on lockdown. I think they've now tried to mobilise their staff to work from home, so they're able to deal with a lot of those inquiries from home through those call centres. I've had a case this morning where we've been told that HSBC are now using some of their commercial and corporate managers that would look at much larger deals to pick up some of the volume that's being done through the kind of smaller business lending channels as well. So the banks are working as hard as they can to try and kind of get through this volume that they've seen. So that's all I can kind of feedback in terms of my own experience of what the banks and the other lenders, like Angie said, are trying to do at the moment.
Yeah, and it's about getting the best information you can to the lender, definitely. Just picking up on that, somebody's I'm preparing worst and best case cash flow forecast for the next 18 months. I see the worst cash being 12 months from now. Will the lenders only consider the next 6 months? This at the moment for us is about short-term cash flow, and it's about who needs support now. If you don't think you're going to need support now, then don't apply now, I would suggest, and apply in 6 months' time when you do feel, or 2 months' time or whatever. But we're sort of lending to support people now. So that's it. You know, we require a 6 months cash flow forecast. If you don't think you're going to be affected in the next 6 months, don't apply yet. Wait and then apply afterwards. I've been asked to give more guarantees about requirements over 250,000. That's probably one for Ryan, because we actually only lend up to 150,000. So could you expand on that, Ryan?
Yeah, over 250,000. It's down to lender discretion, and it would probably fit into their normal course of business in terms of the security that they would look for. So they would look for security that the business has. And that might be a debenture, which covers the the assets of the business, which is on your balance sheet. And then they might look at a property depending on what size of the loan or facility that you're looking for, and they might look at personal guarantees up to 20%. So in a kind of collect out situation, it's, well, what can the business afford to repay? Whatever's left, try and recoup 20% under the personal guarantee. And then obviously they would use our 80% guarantee for the remainder, and obviously take their own loss as well on the 20%.
Okay. Just one last one here. I sort of being pushed on how many we've approved. I couldn't tell you, to be honest, at BCRS overall. What I can tell you is I would suggest I've probably had about 10 approved so far. In other words, everything that I've written so far is being approved, because we wouldn't be writing it, you know, we'd be declining it at an earlier stage. So, but there's lots of other BDMs out there doing the same as I am. I think that's all the questions, isn't it? Yeah,
I'm just going to jump in here and say thanks for answering all those questions. Just go back out to the group then, just one more time. Has anybody got any more questions they want to put to Ryan or to Angie? Always like to give a minute or two.
There's another one just coming here. So if we need the loan, perhaps in June, should we still not apply? If you don't need the money yet, I would suggest let us spend our time with the people who do need it. I'm not saying wait until June, but if you really don't need it now, then no, don't apply now.
Thanks, Angie.
One from Ryan. Chris just wants some clarification there. So, yeah, I mean, the borrower, Chris, is always 100% liable. So at the outset, yeah, they will try and recover the whole amount of the loan through business assets. Like I say, your personal guarantee is then limited to 20%. So if they can recover the full amount of the loan from the assets of the business, then absolutely that's what they'll do. If they can't, then that's when they would then call on personal guarantee first, after the business assets, and then they would take 8% from us and stand the other 20% loss of whatever's remaining.
Okay. Anyone else got any other questions? Anything they want Angie or Ryan to recover, clarify any points? Now is the time to ask. Another question from Alan. I'm not sure who that's to.
I would suggest I have a chat with Alan offline, actually, probably because it's quite detailed. Happy to have a chat offline.
Yeah, perhaps do that then. I'm just trying to establish if I know who Alan is. Alan, would you mind, if you don't mind, putting your email address in the Zoom group chat so that I can hook you up with Angie after this session, so you can have a separate conversation. If you want to send the email address to me privately, then you can do. Question from Natalie.
Where can we get a full list of what's needed for the applications? That's really going to depend on the lender. Again, if you're looking to apply to BCRS, I can send you a really concise list. If you want to pop your email address down there, or anyone wants to pop their email address down there that wants contact, we can do that. Adrian has said that if Barclays have a policy of not lending to my food sector and referred us to you, should we still apply to Barclays? No, don't waste your time. If they're not going to lend to you, that's fine. Just go to a lender that is more likely to do that. Is the scheme open to property developers and investors? It certainly wouldn't be with BCRS, because that's not a reason that we would lend. So I would suggest not. Is that right, Ryan?
It is open to property developers and investors, and again, there's a lot of lender discretion as to whether that's, like yourself, Angie, whether that's within your appetite and policy as to whether you do that, but it's not a restricted sector within the parameters of the scheme, no.
Okay, and another question from Chris.
You would have to ask the government, Chris, on that one. Unfortunately, I can't speak for them. We've been asked to deliver the guarantee within the lines of what they've asked, which is 80% to the lenders, and that's what we're doing. So I've heard that comment a few times. We can kind of feed these things back into the bank, into our product teams who do liaise with kind of Bays and Treasury. So I'll certainly feed it back in, but I think it is something that has been mooted before, but it's not something that I can kind of advise on in terms of the whys and wherefores about the scheme parameters.
Yeah, and the same question was to me. I certainly can't answer that. We'll help lenders quicker. Yeah, we're not asking for personal guarantees. That is something we were doing prior to this, so that is making the process a lot easier. And in effect, it could be argued that it's not as good for us, the lender. Previously, we were taking personal guarantees, and now we're not. So we feel that we're really, really playing our part in this. But I can't answer why it's not 100%.
Okay, and last chance for any questions then. I always like to give a minute or two because I know you've got to type them out. Last chance for any questions. I'm going to put the Chamber's events email address in the group chat as well for everybody to use if you've got any questions after the seminar, or if you'd like me to put you in touch with either Ryan or Angie, pop an email to this email address, and myself and my colleagues in the events team will be able to help point you in the right direction. We have had another question though. I don't know who that would be to, sorry.
Ryan, can you answer that?
Yeah, I mean, yeah, it's not an excluded sector again within the parameters of the scheme. It's not an excluded sector. So I think there's a key point to understand in terms of where British Business Bank sits. So we kind of set the parameters of the scheme for the lenders. Not all lenders will do everything in the scheme and do it exactly the same. So there is lender discretion, and that's why you can go to different lenders if, like Angie said, one says no, you can explore the other. So it is very much speak to the lender in terms of what their appetite and policy is around certain sectors.
Okay, I think I'm going to call it there then. If nobody else has got any more questions, every time I do this, I say this bit and then we get one more question. It's just always the way it goes. But I think I'm going to go with that there isn't any more questions now then. Like I said, if anyone does want to be put in touch with either Angie or with Ryan, then email the events at email address that I've put in the group chat. I want to say a massive thank you to Angie from BCRS and to Ryan from British Business Bank for speaking with us this afternoon. I know there's a lot of information for all of you guys to try and get your head around and get through, but everyone is here to help and they do want to help as much as they can. So thank you to all of you for joining. I hope to see you again soon. We do have another seminar taking place tomorrow, which is going to be based around mental health. That's at 12 o'clock as well. If you want to come along to that, again, let us know via the events at email address. I hope you have a lovely rest of the afternoon and look forward to seeing you soon. Thank you.
Thank you. Bye-bye. Thanks.